Yes, buongiorno. I hope you had a light lunch. I have the honor to introduce our company Bitwise and talk about hyper-Bitcoinization. But first I want to introduce myself. My name is André Dragosch. I'm head of research in Europe for Bitwise. And our topic today is entering the golden era. Some people say golden era, some people say golden age, right? Are we at the cusp of hyper-Bitcoinization? What does it even mean? I'll explain in a second, but first of all, I just want to talk a bit about Bitwise. So the company, it's a US-American company. It was founded in 2017, and we're managing around 10 billion in client assets across different divisions, business divisions. One of which is the ETP business. So we have US Bitcoin ETFs, right? We were one of the first to launch in January 2024 in the US. We have around 4 billion, I think, US dollars in Bitcoin ETF in the US, one of the top 5 in the world. We're also still one of the biggest Bitcoin ETP providers in Europe, with around 1.3 billion euros under management. But we also have other products in Europe, including Ethereum ETPs and Solana ETPs. But yeah, the company was founded in 2017. We used to be ETC group in Europe, but Bitwise acquired us in August, so we became like transatlantic company. I think we have many things in common, like same understanding for highest quality, highest transparency for our products. And so it was a cultural fit, and you can see our CEO, Hunter Hosley, also Bradley Dukey's head of Europe, he's here as well, and Teddy Fusaro, he came from New York today. And yeah. And just very quickly, so the list of our backers, like financial backers, it really reads like a who's who of finance, traditional finance, not only crypto assets, right? I don't know if you know Stanley Druckenmiller, some people just refer to him as Druck. It's probably one of the most, well, at least for my taste, it's probably one of the most well-known investors there are, right? So Henry Kravis, we're very influential backers, and we're very, very proud of this list, right, and this backing. But let's talk about hyper-Bitcoinization. What does hyper-Bitcoinization even mean, right? So when we talk about hyper-Bitcoinization in the context of crypto assets, we usually mean crypto assets, Bitcoin going mainstream, right? We're crossing this kind of chasm into the mainstream right now. But that's what it essentially means. So going mainstream is hyper-Bitcoinization. And if you're familiar with like standard models of technological adoption, because we're talking about technologies, right? Crypto assets are technologies, payments, savings technologies. There's this kind of model by Rogers. I think he developed this in the 1960s. He said so technological adoption has a very typical pattern, right? You start with innovators, so very, very early adopters of the technology. Then later on, you get early adopters, they call it early adopters. And then you have this chasm, it's a kind of threshold where adoption really starts to accelerate. According to this model, it becomes exponential, right? Really takes off. And that's when you enter the mainstream, right? You have this early majority and you get above 50% of the population, right, adopting a technology, right? And I think we are likely crossing this chasm. We are likely entering the mainstream era as we speak, right? If you look at different kinds of data. For instance, on the left-hand side, you can see global ID verified cryptocurrency users. These are data by Crypto.com. It's a very big exchange. They estimate it's only ID verified, right? We know there are also many users who are not ID verified, right? Like miners or people who trade on peer-to-peer exchanges, they're also not ID verified. So this is like a lower bound estimate, how many global users there actually are. And the latest number, these are numbers from December 2024. They imply around 650 million global ID verified users. And Crypto.com itself, they estimate, this is like the dotted line, by the end of this year, we'll have around 900 million. So close to 1 billion. And according to my experience, you have to multiply this number by around 1.4, a factor of 1.4 to get the real number, like not only ID verified, but also including other users, right? So probably this year, we'll have more than 1 billion global cryptocurrency users, 1 billion people. So every 8th person in any kind of room across the globe will have exposure to crypto assets, right? We're really entering this kind of mainstream era. And if you look at, like on the right-hand side, I've plotted the Rogers technological bell curve, yeah. And I looked at survey data from 58 countries. Like they just asked, do you have exposure to crypto assets, retail investors? And if you aggregate all these 58 countries, it implies an adoption rate of 21% already. And this chasm that I've shown you here is around 16%. So once you cross this chasm of 16%, like I said, it starts to accelerate. It starts to become exponential, right? And we probably already crossed this chasm, I think especially in the US, where depending on the survey, you have around 15 to 25% adoption rate, right? So big question is, what does it even mean for the price, right? We're always talking about, can it reach like 200,000, can it reach 500,000, can it reach 1 million, right? Is that even possible? And it's quite possible, it's actually our base case. So in our latest 2025 prediction report, we said by the year 2029, Bitcoin will have the same kind of market cap like gold right now, 18 trillion US dollars in market cap, and will reach $1 million per coin. That's our official base case. That's our official price target. And on the left-hand side, I've just graphed a model that based on increasing scarcity of Bitcoin, right? Supply scarcity that also supports this hypothesis. It's a very good fit historically. And based on this increasing scarcity, you can very realistically reach $1 million per coin. So it's not very unrealistic, right? And these are just different models because we're at the QUANT conference. I just want to show some quantitative data, forecasting models. So on the left-hand side, you see 2025 predictions. These are price forecasts based on different kinds of models. I think Daniele, he loves the power law model. It's probably the most conservative model. So the most conservative estimate for this year is around 120,000, right? Dollars per Bitcoin. More aggressive predictions are like 250,000 this year. On the right-hand side, you see 10-year model forecasts, so over the next 10 years. Yes, these are like 7.2 million, 13.2 million, depending on the model, right? It varies. But again, the most conservative model over the next 10 years says 1.3. That's probably one of the most conservative estimates. So it's very realistic. But what are the key drivers, right? I mean, we talk about ETF buying, and the ETF launch in the US has been the most successful trading launch by far. It's been even more successful than the GLD ETF launch in 2004, I think. It's been way more successful than the NASDAQ 100 QQQ launch in 1999, which happened, by the way, in April 1999. And you had almost a whole year of melt up during the dot-com bubble, right? And still, Bitcoin ETFs were far more successful, right? we had $38 billion in net inflows into US spot Bitcoin ETFs, right? Which is unprecedented in the very first year. So ETFs are buying way more than is currently produced. Even in 2025, US spot Bitcoin ETFs have bought 2 times the new supply, new production of Bitcoins. Corporations like MicroStrategy, they're now called Strategy, they've bought 2 times the new supply. So only ETFs and corporations have bought this year, 2025, 4 times the new supply. 4 times. And we haven't even talked about nation states, right? But I don't know whether you've seen this article. It was published in the Financial Times. Head of Czech central bank wants to buy billions of euros in Bitcoin. So they're currently doing their due diligence whether to invest up to 5% into Bitcoin. And 5% for the Czech National Bank is around 7 billion euros, which would translate into around 70-something thousand Bitcoins, right? Which is, I think, 3 months of supply. But anyway, we also have an internal inquiry at Bitwise in the US. This is like an insider kind of story, but we had an internal inquiry by a Latin American central bank. They asked us, we want to buy Bitcoin, we want to sell our treasuries. That was the interesting part. We want to sell our treasuries and buy Bitcoin ETFs. That was a foreign central bank that inquired directly with us, with our colleagues in the US. So it's happening, already happening. And on the right-hand side, you can see many countries are already holding Bitcoin, right? Most famously, the US government already holds almost 200,000 Bitcoins. And these 200,000 Bitcoins, 198,000, right? They've already been converted into this national digital asset stockpile, right? Based on the latest executive order. But yeah, nation-state adoption is accelerating. It's not only Czech National Central Bank, right? It's not only the US. I mean, we read lots of articles about the US, but it's happening in the European Union, Switzerland, Germany, Poland, Hong Kong, Brazil. We have other places. I think Japan. There are many countries where you have at least some kind of initiative where politicians want to introduce strategic Bitcoin reserve legislation, right? I mean, most famously in the US. So the Bitcoin bill proposed in the US, they want to buy 200,000 Bitcoins per year for 5 years, so 1 million Bitcoins in total, which is around 5% of the total supply, and hold it for 20 years. This is massive because it essentially established some kind of Bitcoin standard, because the goal is to retire government debt with these Bitcoin holdings. So essentially, they're backing the US treasuries with Bitcoin, right? But it's not only adoption, right? Nation-state adoption, it's also scarcity. We know since 2024, since last year, Bitcoin is already scarcer in terms of the production rate than gold. This is the stock-to-flow ratio. It's a concept from the commodities market. And what it essentially does is you have the current supply, right? And you divide it by the annual production, right? And then you get this kind of stock-to-flow ratio. It implies, for instance, for gold, it implies so you need 60 years of current production to replicate the current supply of gold. For Bitcoin, it's now these are end of 2024 numbers, it's 91 years. The current numbers say 124 years, right? And will double again in 2028 based on the algorithm of Bitcoin. It becomes scarcer and scarcer over time. It will double 2028 and double again in 2032, right? So it will be 9 times scarcer than gold. You know? So you have increasing adoption, ETFs, corporations, retail, nation states, plus increasing scarcity. Yeah, but what if adoption really accelerates? I mean, you've seen this chart, the technological adoption curve. we're crossing the chasm, right? I've told you we have around 21% global adoption rate. What if adoption really starts to accelerate, right? And according to that model becomes exponential. What happens then? The answer is nobody really knows. Nobody really knows. You can model this based on all kinds of different models, but they give really absurd price targets. The key point I just want to make is we should keep an open mind because we've never seen anything like this. It's a new technology, right? Especially Bitcoin's new technology. You have probably exponential adoption growth, right now, and you have absolute scarcity. You only have 21 million coins. The production rate decreases. We don't really know what happens. Price could go exponential once we don't have supply left on exchanges. We don't really know. So I just wanted to conclude with a very good quote by Samson Mow. He's a Bitcoin OG. He's been in the industry since, I think, forever. Paolo, if he's in the audience, he probably knows him very well. To truly understand where Bitcoin is going, you need to really grasp the interplay between exponential growth and absolute scarcity. Yes, and that's my presentation. Thank you very much and enjoy the conference.
Thank you so much, Andre. Just a minute for a couple of questions. The first one that comes from the room is if Bitcoin's uses grows, as you showed us today, and country buys Bitcoins, and maybe central banks are going to buy Bitcoin, why is the question the price doesn't grow faster than this?
I mean, I said like ETFs are buying more than current production, right? I said corporations are buying more than current production. But of course, if you have rising prices, you also incentivize old supply, right, old holders to distribute their holdings again. So that's probably capping the price growth. But at the same time, I think you have lots of macro uncertainty, right? We talk about tariffs, right? We talk about pickup in inflation. Maybe the Fed is going to hike rates, right? They're pausing rate hikes right now. They used to cut rates, right? There's lots of uncertainty right now. Geopolitical uncertainty and so on. And it also affects Bitcoin because Bitcoin is a macro asset. But at the same time, we're observing, so this is the macro side, right? At the same time, on the on-chain side, so everything that's happening on the blockchain is so bullish, right? You have this increasing supply deficit caused by ETFs, caused by corporations, and probably soon by sovereign nation states, right?
Yeah, that's very interesting because we're living kind of a risk-on cycle.
Yes.
But looking at 2025, where do you see potential downside risks, if there's?
I think potential downside risk is purely macro-based because adoption is probably accelerating as we speak. We're estimating, I mean, I've said that we have seen $38 billion in net inflows. We've already seen $5 billion in net inflows into US spot Bitcoin ETFs this year, right? And we estimate that this current pace of flows will actually be at par in 2025 or even exceed the level of inflows that we saw last year. So there will be a structural demand, and we're also seeing this is really affecting the exchange balances significantly. The drop that we're seeing of liquid supply of exchange balances is mostly due to this marginal buyer, which are ETFs right now, and this will probably continue.
Okay.
So, but I think in terms of risks, I think macro is the biggest risk, right? US housing still very weak. We have geopolitical tensions, right? We have the tariff talks. And I think it's more coming from that angle rather than like crypto-specific risks, you know.
And when you hear Jay Powell saying, all right, so Bitcoin might be like gold in investors' portfolios, what's your reaction?
I mean, I think it's a better gold because Bitcoin is essentially gold built with teleportation, right? I mean, the beauty about Bitcoin is you can preserve your purchasing power over time, right? It's a store value. So you can transfer your wealth over time, but you can also transfer your wealth over space, right? You can you can send money from I don't know, from Lake Garda to New York, for instance, right? And so I think Bitcoin combines the characteristics of fiat money, like the dollar, euro, where it's also very easy to transfer money over space, right? To send money internationally, right? With gold, you can't really do it because you lose so much value, right? Your face value, because you have high transportation costs. But because Bitcoin is an internet native currency, you can send it over the internet, right, electronically, but at the same time preserve your purchasing power.
Yeah, that's also why central banks are concerned about anti-money laundering when it comes to Bitcoin. Is this a real concern? Do you think like central banks might put, kind of a brake to the market due to those risks?
I know what you're referring to, the latest comments by Christine Lagarde probably. But if you do like a real fact check, they're untrue, right? They have no real scientific basis. So if you look at data about illicit activities on Bitcoin, on other crypto assets, the share of illicit transactions in crypto assets is very low. It's below 1%, it's around 0.3%. So, and yeah, you can identify these transactions. We work with service providers that blacklist certain addresses, right? So we do our KYC, AML checks, for instance, in our ETPs. And yeah, so we safeguard our investors to avoid this.
All right, terrific. Thanks again. André Dragosch, thanks.
Thank you.
Thank you.
Thank you very much.